Hey, what's up? This is Damon from Stock Barometer. It's the morning here in Asia. So I just woke up. I'm not turning my webcam on. I'm pretty much in my sleeping clothes. Yes, I sleep in my clothes. What we saw last week was a rather bullish end to the week, and being so, we have a few decent stock picks that should ride themselves upwards into the end of next week and possibly beyond. So I'm going to show you these six stock picks for next week. And the first one is General Electric. What we saw in General Electric was a series of very small candlesticks that look kind of like doji stars, but not completely doji stars. At, in the last week, it's been going steadily upward. When we saw this reddish candlestick here, we could assume that it's probably going to continue going up, but we don't want to make a bet on this day. We want to make a bet the day after we see the resulting candlestick, because it's often likely what often happens after this type of pattern, and the pattern we're looking at is a rather thick green candlestick. So I just woke up, followed by a doji star. And what happens after that can be one of two things. If there's a candlestick above this doji star, like we saw on Friday, then the pattern continually moves upward in most cases. However, after this doji star, it's also very likely to see a large candlestick down here that's red, which would imply a reversal. So this is usually a sign that we should pay attention to the stock, see what's going to happen the next day, and then buy in or either short the stock depending on the resulting candlestick. Now, what we saw was actually the continuation indication. So I would say on Monday, you should, if you're interested in GE, you should probably buy in and ride this trend that started on Monday actually, ride this trend upward. That is GE. The next stock we'll look at is Cove. I call it Cove because I don't really know how to pronounce this. Now, the next few stock picks I'm going to show you are actually more or less similar in their pattern. What we see is two large green candlesticks back to back of pretty much similar size, and where the closing price on the previous day is more or less close to the opening price on Friday. We don't really care about the days before because it's kind of a stable pattern. We did see a gap right here with a low volume. So based on gap trading, which is my expertise, I could have told you that this would probably close. This gap would close. In other words, we would see a big red candlestick or a series of red candlesticks that fill this area, which happened right here. Now, after that closes, pretty much anything can happen. So if I were to watch the stock for a while, I would have said, okay, short the stock here, wait for the gap to close, and then buy the stock back here. That would have been even better because we could have made profit on these two large candlesticks. But it's not too late. We can see that the volume here on Friday is actually quite large, implying that the movement upward is based on news probably. And we can trust these two candlestick patterns to continue. So this is Cub, and if you are interested in stock that is expensive, well, this is the one for you. If you are a person who wants to make a large amount of profit in a short time, this is the type of stock. The stock is trading at around 100. This is the type of stock to place options on. That is Cub. Next is Zillow. This is Zillow, and we see actually something similar. We saw these two kind of back-to-back soldiers. And what we're seeing with Zillow is actually a bit different because we see a gap, another gap here. Like I said, gap trading is my expertise. When you see a gap that is in continuation with the trend implied by the candlesticks, like in this case, that is called a continuation gap. Now, a continuation gap tends to go upward, tends to widen if the volume that occurred on the day of the gap, which is on Friday, is much larger than the previous day's volumes, which we see here. So this is actually a very safe bet. It's a continuation gap, which means that it's very unlikely to close, And at the same time, continuation gaps tend to have a very strong momentum following the gap. So this is also a good stock to get in on with options, as it has a high price associated with it. We're going to move on to Popeye's fried chicken. Is that it? Popeye's Louisiana Kitchen. You like fried chicken? Oh man. Let me type it correctly, and you'll be able to see it. PLKI. Okay, well, I guess we don't get to see this candlestick. Let me go to another website. Okay, let's try it here. PLKI. Okay, and here we have a chart. It basically shows the same thing. We have these two back-to-back soldier patterns, a decent volume, which implies that the stock price is probably going to go up. It's good to get in now because, as you can see, though the stock has shot up, it has also fallen to a more or less short-term low. So this is a good time to get in. The pattern is more or less continually upward, so this is also a decent stock to hold on to for the long term. Again, this is a pattern that is usually quite trustworthy. So, in fact, what we're going to be looking at today is mainly this type of pattern. So this is also a decent stock pick for the following week. Let's move on to Mankind. Can't trust Yahoo right now. Alright, Mankind, again, you see the same type of pattern. You see the two candlestick, two white soldier, back-to-back matching lows candlestick. Now, this one is only trading between $5 and $6, so it's really not high in terms of volatility. If you buy in on this, you might get it up to $6. You might want to leverage this with options, but again, this is also a low-priced stock, so it's not something you really need to worry about in terms of dedicating a large portion of your portfolio to. So if you just want to get on this and ride probably a short-term trend, you can do this. If you notice, there's kind of a gap here that filled. Now we're pretty much at a bottom. We probably have hit a support level around 5.3, which is now pushing us back up. There might be a resist at 5.9. So you know what? Actually, I'm going to take this stock back because of low volatility. And the possibility of resistance. I'm going to say, scratch this from what I just said. Let's not trade this one. Let's skip over this one. I saw the candlestick pattern. I thought looks decent, but now that I'm looking at it in this candlestickchart.com chart as opposed to the Yahoo chart, different charts can give you different interpretations. But you generally don't want to trade, even if you do see a decent candlestick pattern. You generally don't want to trade a stock that has such a low volatility. It's only trading between $5 and $6. So I'm going to skip over this one, go to the last one, which is CA. And here's CA. CA, again, you can see a gap. The gap is more or less filled over time, but we can say that this gap might not be an area gap, so it doesn't need to fill. However, it more or less did fill, and now we're at this low point, so we should buy in around here. Now, retrospectively, of course, we wouldn't have actually bought in after this candlestick, but retrospectively, this was the best time to buy. We see these two white soldiers, these two green soldiers. This candlestick pattern with matching lows is quite indicative of a following upward trend. So this is a decent stock to buy into, at least for the short term, to ride that trend upward. We might have resist at $32, but at least you can make an easy $100 if you buy a call option on this. So that's the last stock. Please subscribe below for my weekly stock picks. I will be doing these as long as people are interested in them. So please leave comments to make sure I know that you're interested. And go to stockbarometer.com for my newsletters, or go to damonberrio.com for a free guide on gap trading. Thank you.